Right, where do we start with this? We're not sure what our customers think, how they make decisions, what we can do. Let's get the panel up. I'd like to welcome to the stage, first of all, Emma Astley. So Emma is founder of Cover My Bubble, a family-focused brokerage she created in memory of her daughter, Lily Beth. She's passionate about helping families understand and arrange the right cover in a real and relatable way, and uses creative, heartfelt content to raise awareness of the value of protection across social media. And for anyone who's eagerly gripping their programme, Moira O'Neill has changed dramatically and looks rather like Rhys Williams now. Rhys's LinkedIn bio describes himself as director at Quiet Room, a youth rugby coach and singer of deceptively downbeat songs. So he'll be putting at least some of that expertise to use as he joins us today. Please welcome to the stage, Rhys. Ryan Griffin is Protection Director at One Family and joined the business as part of the acquisition of Beagle Street in 2022. He has over 25 years' experience in a broad range of commercial roles across insurance and reinsurance, and has previously worked for Aviva, Ageas Protect, Swiss Re and the Post Office, amongst others. Welcome to the stage, Ryan. And Elisa Wallington is Product Director at iPipeline and has 14 years of experience with them, rising from business analyst to product director. She has shaped award-winning tools like Solution Builder, Prequo, and Lead Gen through fast, iterative delivery aligned with agile principles. Right, welcome to the stage, Elisa. Okay, so we're going to dive in. I've got a few questions for the panel, but a reminder to you all to be thinking about your own questions, what you think, and I will throw it over to you all to ask away shortly. Ryan, if I can start with you, given your experience and background, I wonder where you stand on applying product upgrades retrospectively and what experience you've had of grappling with that in your career.
Yeah, so I've actually done both things in my career. So I've applied product changes retrospectively in some instances, and I've also chosen not to apply them in other instances. And that's a kind of boring way of saying, I guess, my view on it is it depends. It depends what the changes are. I should say that this is sort of slightly amusing, actually. The first time that we did apply product changes retrospectively, and Rhys might remember this because he may have been involved in writing the product documents at the time, we had to do it because we were new to the market. We were doing our first CI refresh after we'd been in the market for about a year. And we realised, after doing all the work with the reinsurers and getting all the documents ready, etc., that we hadn't actually built version control into our system, and that the cost and the timescale to build version control was going to be greater than the cost of upgrading the CI definitions for existing customers. So sometimes, you know, these things happen by accident as well. So we did that. Later in my career, we've had the option to do it a few times subsequently, and I've generally chosen not to do it, really for reasons of complication with customer communications, etc. I think I'm sort of with Jason really in principle about you do the deal at the outset. We promise guaranteed premiums, etc. at the outset. We're talking about long-term business. We're taking quite a lot of risk already. And to then change the terms of that halfway through seems a bit odd to me, actually. The other thing I would say is not all product changes are positive. So if you look at CI definitions over the years, they've actually got progressively tighter in a lot of cases. And I think anything that you would do which would cause customer detriment, you absolutely should avoid as well. So that's probably my position on it.
Thanks, Ryan. I think inevitably we will come on to the issue of transparency. I think, Elisa, if I can come to you next, is this just another example of an industry which struggles to deliver in a simple and transparent way?
I don't think anyone in this room would disagree that we've got issues with transparency in our industry. I think two things I've learned from the sessions that have been previously was I am definitely not a policy geek, and I am definitely system one side of the brain. My boss will attest to that. But I think listening to the types of the complications that we have already. We talk about nomenclature, how many different definitions we have, all the different jargon in the industry. I find that difficult to comprehend, let alone a client. So I think it all comes back to me for about two things. It's education and it's continuous engagement with our clients and how we interact with clients. I've always been an advocate for the advisor. I think it's such an important, such a complex world out there with the amount of products that we have. How could you possibly make head nor tail of that as somebody on your own trying to decipher that when people in the industry struggle to keep up with the definitions? So the continual engagement for me is, it's a must. It's understanding. It's hard enough, I think, for the advisors in the industry today to at least sit down and have that conversation with the customer in the first place, to get them engaged in the value of it, to even start that conversation, let alone then to go through and make sure they understand exactly what they're getting, exactly what all those things mean. Because at the end of the day, all the customer really cares about is, when I claim, will I be covered?
Yeah.
And if we're getting to the point where customers have not understood what they've got and what they've bought, and they're coming to claim and they're being declined because they're trying to claim for something that they don't have, we've failed.
So I think if we're talking about communication and transparency, Rhys, this seems the obvious point to come to you. So if we can't backdate product features, how do we manage it with customers?
I think the real issue here is that if people, one of the things that makes people most cross is the feeling that they're somehow being ripped off or misled. And even though there are really, really good reasons why this might happen, what we have to remember is that it's really hard to put these rational thoughts into people's heads when there's already a thought there, which is, you're trying to get out of doing something that benefits me. So that sense of, if people believe that you're trying to wriggle out of something or trying to get away with it, whether that's true or whether it's not, that's the idea that is in there that it's hard to shake. So I think if you have to do it, and I think there are loads of credible reasons why you might have to leave people's policies as they are, then it doesn't seem to me to be a very good idea to wait to be found out. Because then the issue then is a perceived lack of honesty. So if there are credible reasons, credit people with the intelligence to be able to follow that argument, to be able to understand it and explain it as clearly as you can to them, and be as upfront and as honest as you can too, because people will thank you for that. We have an industry problem with sorry, that was a genuinely amusing sneeze. Sorry. We do have an industry problem with lack of trust, and if we are perceived to be not being upfront, then we're just fueling that bias. We're just confirming for people the thing they already think about us, whether that's fair or whether it's not.
So Emma, I guess this is where the role of the advisor is key here. So is the introduction of new features an opportunity to then have that conversation with clients who have been rated or got exclusions or aren't eligible for these new features?
There's a lot to it, really. First of all, it's bloody hard work when everything is changing and all insurers are different and then all your clients are different. So the way that we do it is we have that conversation with our client. It's a first call, take all the details from them, and then it's then our job to go away and research the market based on their medical history and needs. And that's when it becomes so much more different and difficult because of what they need, or have they had previous medical conditions that they're going to have excluded. And it's just, you've got to take everything into consideration and then have them conversations with your clients so they fully understand it and they know what they're taking out and they know why they're having enhanced or children's cover or bump cover and all the rest of it. So yeah, it's I enjoy it. You know what I'm like, I love it, but it does make it hard work, and this is why it's great that there's tools out there to show us the different in the definitions and everything else, so we then can advise our clients and recommend the right products for them, basically.
Thanks. Ryan, I'm going to go back to you and flip it back to the insurer perspective. I think we've heard a bit from our speakers, but I wonder if I can get your view on the advantages or pitfalls of backdating these product changes retrospectively?
I mean, I think where the changes are going to be a positive impact for the customer, I think it's definitely that insurers ought to consider. I guess the thing that works against it is cost we've talked about. If we are, for example, adding new illness conditions to a CI product, would that have had an impact on underwriting? So are there customers who you might be offering it to who you wouldn't have chosen to offer it to at the outset if you'd had a different underwriting question set, for example? So that it's quite a complex decision to make. I do also sort of slightly pick up what Jason said as well. The kind of arms race in conditions has been quite interesting because there's been it's kind of stopped a little bit now, but for many years there was this kind of adding conditions that nobody would ever claim for, which went on, and it was like all about a numbers game, who had the most conditions. And in reality, the insurer wasn't paying too much additional reinsurance cost on that because they weren't expecting to get any additional claims on it. So I think you've got to also sort out the difference between what's kind of a marketing gimmick or designed to give you PR in the market versus what's actually making a difference for customers.
Right, I'm just going to test the waters here. Any questions from the audience at this stage, having heard from all of our panellists? I can see one over there. There's a mic coming to you just now.
Doesn't this just advocate for more regular reviews from advisors? Like, providers don't know a client's full background. You know, there might be changes that could be positive for some clients, negative for others. Communicating that isn't necessarily the right thing for that client. Whereas communicating that with the advisors, who are then going to have more regular reviews, would be to the benefit of the client rather than the providers managing that themselves.
I'm going to throw that to the whole panel, but I guess, Emma, you're the obvious person to kick us off.
Definitely. That's what it's all about, is you have to have regular contact with your clients. Like, we do a lot on social media, so that then is prompting clients if they've had a claim or they actually want to look at different insurances. And we'll do 6 months, 9 months, and then we'll always do a 12-month anniversary. We send out bubble certificates to clients so they're aware, but ask that important question, has anything changed? But the more important one that we should be doing as advisors is, was somebody originally rated from offset because of the BMI or medical conditions, or did they have exclusions because they've just recently had investigations for, say, breast lumps within 12 months? That's when we as advisors again should be recontacting our clients and re-looking at their insurances, because we might be able to get it cheaper because they've lost weight. We might be able to remove their exclusion that they had 12 months ago, and we're going to get them a better product. Yes, as an advisor, I'll probably get a clawback, but it's not about that. It's about what's doing right for your clients, and that's what we should be doing so the client does have the most suitable policy for them. So, yeah, 100% we have to be doing reviews.
Thoughts from the rest of the panel? Is this all on the advisor? Is it about us all communicating more regularly?
I think it's all, from a tech provider's perspective, we can sort of help provide tools and services and you know, aids to help have those conversations. But I think client engagement for me comes from the advisor to the customer, and it's also about building that relationship and that rapport and the trust. The trust is so important that, you know, if you are then communicating changes that something's been taken away, we've got to have that conversation. It must be easier when you've built up that relationship with the client. And I think, you know, we'll probably touch on it again, but AI, you know, it is there and it's coming and it will disrupt and it will change, but hopefully for the better, and that'll take away some of the, you know, mundane processes, the admin things that take up your time, so then that you've got more time to spend with the clients having the most important conversations. I think it's all about trust, and if you've got that good trust with an advisor, it won't be a you know, I was going to say a bad word then, not a bad, what's a better word for that? It won't be onerous to keep having that conversation and bringing that up. It won't be, sorry, stop now.
It is the advisor's job, definitely. For me, that's what we are doing for our clients. We shouldn't be pushing it back to the insurers saying they need to send out statements every year or they need to be doing that. No, they're your clients. You have to look after them. You have to be doing right by your clients. So when I cringe when I do hear some advisors saying, but why isn't the insurer doing more in regards to contacting clients? I think you should be doing that as an advisor.
Yeah, I'm just thinking because I bought. In fact, I stood on this stage and talked about the fact that I want to be one of Britain's most insured people because I was basically trying to buy everything. Lots of people approaching me over lunch with their business cards. I bought a lot of protection in 2014. Here we are, it's 2025, nearly 2026. My financial advisor has not spoken to me once about the cover I bought. Now, my reasoning for that is that I went to like lots of people do, went to a high street financial advisor who was much more interested in getting me to open a SIP and make, to charge me an annual management charge or advice charge on pensions and investments. And he, in fact, I remember he had to get a guy from Swindon. I don't know why I've given you that anecdotal colour, but I think it helps. He had to get a guy from Swindon to do the protection because he didn't really understand protection well enough. And I'm now reflecting on the fact that maybe that wasn't the best choice to go to somebody who didn't really understand it well enough to do the kind of things that you obviously routinely do.
Yeah, it is about signposting, isn't it, and going to the right person. But you, as an individual or a consumer, you trust the person you're speaking to. And that's why we need to be out there educating, because people have these policies that actually, they're not fit for purpose, or they've had it for donkeys, they've not updated the name, their address, they've had children, they've moved, they've divorced. This is why we should be keeping in contact, and you have to review them insurances. So, yeah.
Should we have a talk after?
I will help educate, don't worry.
Thank you so much.
I think that touches on something else that came up, I think, and again, it's something that's quite close to my heart, and I know it's very close to Reese's heart, which is customers don't know what they've got. The majority of customers, if you ask them about the content of their protection policies, would have no idea. Now we spent a lot of time many years ago trying to make documents clearer. But it's not just about documents, it's actually the product constructs are actually pretty complicated. And you'd have to be pretty keen to understand them as a customer to really get into the nitty-gritty of it. So I think there's an ongoing challenge for us as an industry and as a market to improve customer education and to make policies clearer, make it clearer what people are covered for.
Yeah, it's that thing that we think sometimes information is the answer to everything, whereas I'm with you. I think if we can make products and policies clear enough that you don't need to be educated,
exactly,
and that's the biggest win.
Yeah, I agree.
I think that speaks to Lizzie's point there on the consumer understanding. I think I saw another hand up, so I'm just checking. Yes, here. And then I will be coming to this side of the room as well, I promise.
I think if telematics for life was my first hobby horse, the regular engagement with the customer is the second one. Firstly, Ryan, I probably should apologise for no version control, but I'm pretty sure it was in the spec, so I think the challenge is we still have this sort of analog digital divide where insurance is sometimes bought, you stick the policy in the drawer and you hope nobody has to ever open that drawer again. Yeah. That's the analog world. A true digital system won't wait until the claim event to have that conversation. They'll look at all of these sort of myriad of events that go on between sort of that purchase and that end of that policy and use that to create those alerts to give the advisor not just a regular intervention, but a meaningful intervention. You've made a change of address yourself. That alert goes to the advisor. So, by the way, I've moved house, but actually, here's another protection conversation. Is the relevance of those alerts to enable those conversations to be meaningful. And I think that's where, as an industry, we really need to embrace if we truly want these policies to live and breathe with you.
Is there a question in there, Chris?
No, it's just me.
I think Zoe's got a question.
Zoe's got one, though.
I completely agree that it needs to be the role of the advisor, but what happens with orphaned clients who don't have an advisor to go to? Surely there's a responsibility then on the insurer So if it all gets put on the advisor, that's great until suddenly your advisor no longer exists.
Yeah, I think it all depends on where the client got the policy from. You're right, and yes, there is that responsibility for the insurer as well, and they do a good job of it, where they do send out emails to clients, remind them of their added value benefits. Have you registered? Have you checked your documents? They do send, most of them, annual statements as well. So yeah, there is that with the insurers doing it, but I'll always keep saying it should be the advisor, if an advisor is there for clients as well. But yeah, it helps backs us up with the insurers helping as well.
Ryan, what would you add of the insurer hound?
I think I just agree with what Emma said, really. I think it's... so we obviously sell direct as well, and I think there's an ongoing question as an insurer about how much customer engagement you should have. There's conflicting views about it within the insurance world about...
They're scared.
Should you? They're scared. They are scared. Should you send annual statements, for example? Does that provide a customer benefit to remind them of the cover they've got? I know for many years, I'm showing my age, there've been a lot of people who would have said, well, that will just encourage lapses, which I think is so kind of backwards in terms of a way of thinking. So.
Yeah. Or discourage.
Or discourage, indeed. But that was certainly a view you would have heard a lot, 15, 20 years ago, that you shouldn't do it for that reason. So, yeah.
But it's like what you said, when you do speak to a client and you engage with them again, you actually then have that opportunity to have an open conversation and sell other products, or do they need a top-up to run alongside the current policy? Because there's no point changing that, but have that top-up policy, or have they had kids, so now they need to look at children's cover or bump cover, and it's thinking.
It's an interesting one with the likes of GIOs, for example. Again, it's down to customers don't know what they've got. So they don't know, for example, that if they have a new mortgage, etc., they can extend the cover they've already got. And you're really relying on the advisor in that instance to have regular reviews to let the customer know these things, because the customer doesn't understand that.
No.
Yeah. Which is why take-up's really low of those things, right?
Yeah.
There are also, from the project that we did together, we worked out is 18 years ago, because my son was a baby and he's now at university. They're really hard to explain.
Yeah.
It's really complicated. I mean, we virtually came to blows, talking about how to talk about it. And for that reason, you only find the information about things like GIOs if you really dig.
Yeah.
It's on page 98.
Yes.
Because it's so impenetrable and so complex. And I think, we're just, the entire industry is littered with these things that are in the client's best interests, but the unintended consequence is that it's intensely complicated, and therefore people are turned off and don't engage with it. So they never get the benefit that we're trying to design in.
Yeah.
Isn't that the role of the advisor to then? You wouldn't expect a client to understand what the GIO was necessarily, would you? You expect to go, I'm going to match what I'm recommending to you based on the needs that I have understood. You have told me what is important to you.
So when your needs, if that advisor does have that conversation, when your needs change, they have the knowledge base to be able to go away and do the difficult stuff for you.
Yeah, the importance of...
Yeah, the difficult stuff is actually trying to change GIO with an insurer, actually, because it is absolutely hard work trying to do that, believe it or not. So, yeah, it's easy to explain it to a client than get it changed. Sorry.
Someone's had their hand up over there.
Getting into really positive notes.
I can see a couple of hands up, but I'm conscious I haven't asked this side of the room if you've got any questions, views, things you want to say to the panel. I can see one hand up. Andy is on his way with the mic.
Thank you. Ryan mentioned that one of the issues here is that we guarantee customer premiums up front for the full term. There are quite a few markets internationally that wouldn't necessarily do that. And I guess the stats that Carlton showed suggests that customers really value being able to access the latest developments in the product. So if they value that, I suppose my question is, do customers value that guarantee that we give them up front? And if they value having a more current product over having a guaranteed price up front, is there a change there that we could make to kind of square this circle?
Great question. Ryan.
Oh, that's a difficult question, isn't it? It might just be because it's kind of been standard market practice in the UK for quite a while, but I'm quite a fan of guaranteed premiums. I'm quite a fan of a deal's a deal. We underwrite you at outset, we guarantee the cover, we'll stand behind it, we won't ask you to pay any more. I think there's an interesting thing which Carlton mentioned, which is if you're going to give additional cover, do you ever want to be in a position to give the customer the option to pay a bit more to have the additional cover? I think there's some merit in that. I think it'd be an interesting one to explore from a kind of, to see what the take-up was like more than anything else. I think, see if customers actually value it. Do they understand it enough to pay more for it? Again, back to understanding.
Yeah, I guess for the customer, it's the unknown unknown. Do they even know there's a choice? Emma, what do you think?
Yeah, I think it's just having that good conversation with them. You'd be surprised at how many actual people want to know the differences, and if it is £7 different to add on the enhanced, because they have so many different conditions on top of what they would have had on a core cover, they do want to have that conversation because they've seen examples of critical illness income protection or life insurance paying out. There's that much now on social media. People want to have it, or they want to be with an insurer who has GP services or mental health support, or having that conversation where they can actually be diagnosed for any neurodiverse conditions or speech and language therapy. It's going into detail as an advisor. And if you say this insurer doesn't offer GP services, but this insurer does for 50 odd pence more, the client is they most definitely want to go with that one. So you have to give them that option and just explain things.
I think it comes back to what Lizzie was saying earlier about choice, is that we don't like things to happen to us without being given a choice. So I was thinking, as you were talking about that, the time when U2 uploaded their album onto everyone's phones, like nobody asked me whether this was okay. And sometimes the things that we think are good, well, oh no, but it's good for you. No, but I want to decide. And then the other thing we get really cross about is just not being offered that choice. You know, let me decide whether or not this is good for me. So it comes back to what Ryan said. I think if it's practical and affordable to communicate with people and say, look, we've introduced this, you have the option to take it, it will cost more, do you want to? Then at least as a consumer, I'm in the driving seat.
Yeah, 100%.
Yeah.
Any other questions from this side? If not, Graham, I could see you had your hand up.
Mike.
Do you want my mic? Because I've got two.
Question about signposting. When it comes to automation, it could be the mortgages world that gets automated first before protection does. Do you have any concerns about signposting coming from that world if it's coming from a machine that customers won't necessarily want to engage with the machine if they're sort of saying, go and have a protection conversation. If it's a machine telling you that, you might just think, I don't want to listen. If it's a human being telling you that, it might be a different conversation. It might be
I'll start if that's all right. I'm hearing some interesting and conflicting thoughts around this. That I was at a breakfast yesterday talking about personalisation and AI, and the strong view from the people in the room who had practical experience of doing this was that actually people are quite happier than we think to have a conversation with a machine, particularly if it's something where they would otherwise be embarrassed. So embarrassed by their own lack of knowledge was the chat we were having yesterday, but it could be embarrassed by a change in their life circumstances, a health problem, things that you don't necessarily always want to talk to with a person. And I absolutely respect the idea that we want to talk to people, but again, it comes back to being able to do it on our terms. That there are times when a conversation feels easier when you don't think the person or entity that you're talking to is judging you.
Yeah, I think there's a difference in that in terms of age groups as well, I think. So I think the younger the age group, the more relaxed they'll be with engaging with a machine. You see it now, you don't see people making mobile phone calls very much anymore. Like people used to talk on the phone all the time, but now everybody just uses WhatsApp and text messages. So it's interesting. It's the days of human communication, I think, are or the ways that we communicate are very different from how they might have been a few years ago?
See, we get it, from our perspective, we get it a lot different. Our clients are a lot the younger generation, got children, and when they do feel at ease, they inquire with us, they book into my diary, but then they're very open-minded and they want to talk about it. And some of the medical stuff and mental health stuff that they've been through is so deep and so personal. And this is, you come off the phone and you go, gosh, but we find people tell us a lot more, and that then makes us give them a better recommendation because of what they've done. So we see the different from what we do, really. And they tell us everything, and sometimes too much, but yeah.
That's just a great advert for the relationship they've got with you. You know, if you have a great advisor and a really strong relationship, then of course people will be open because you've already built that level of trust with them. And I suppose my point was, when those conditions aren't there, then what's next best thing?
So yeah, that's the difficult bit, isn't it? Is that actually we do need to have that backup from insurers or technologists so people can engage and ask them questions. And like you said, WhatsApp is a big thing at the moment. We have clients who they'll message us, but they'll want a voice note instead of a telephone call, or they want an email. So you have to be diverse in how you contact and talk to people based on their circumstances, really, and their needs.
I think just, sorry.
Carry on, Elise.
I was just going to say, just to Graham's point there as well, I think we talk a lot about the trigger points of having those conversations in the first place, and a lot of this is obviously mortgage related, and then that goes on to signposting into protection perhaps, or protection on its own. But I think, as Phil said in his presentation, it's the underserved markets like the renters, the GIOs. How do we educate and engage those people who don't have the natural touch point of coming in and having the conversation with a mortgage broker? Usually that's your first entry as you come in, and then you're going to have that conversation. It's probably first introduced to you at that point. If you don't have that touch point, who do you speak to? And how do you reach out to those people? So if we're going to grow the market, how do we start looking at, those underserved markets and how we tap into that? Sorry, there was a question.
Yeah, hi. What if the robot says no? What's going to happen?
You give them a human.
Or, well, yeah. And of course, the trust of AI and the trust of digitalization, we've seen, pushbacks. How are we going to deal with that? Because the reality is data security and, would you trust your government? Would you trust your robot? How do you think you'll deal with that?
I think for me, it's always coming back to, with AI and the things that are coming in again, I go back to the point of you want to use it to remove with guardrails the difficulties in reviewing documentation and summarising that for you, and taking away the pain of something that you would have to call around tele-underwriting departments to have those conversations, or emailing people, or whatever that form of communication is. If you can take the things like that have if policy documents, for example, it's a set of information. All we're trying to do with AI, for example, would be how do we summarize that and get to the information quicker so we can use that to benefit the advisor. I think someone said earlier it's like as a co-pilot approach. As long as I'm quite risk adverse to it, to be honest. I did use it this morning, co-pilot, but it serves me for the manual tasks, the things that I want to review quickly. If someone sends me a document, I want to get out the key points. I'm going to look at those things. And I think the summarization of medical records and things like that, I think obviously we have to be careful. You need human interaction in this process, is my opinion. I just don't think you can, but we can open channels. There's plenty of firms out there that offer choice. If you want to come in and you want to start and say, I don't want to speak to an advisor, I know what I want, you can come through, but eventually at some point in that journey, you may want to say, I just want to check this because I'm not quite sure that's what I want. And you can drop out and go into that journey. I think it's about, as long as we've got choice and the opportunity to interact the way you want to, I think the most important thing is that they're getting that cover in the first place, right?
Yeah.
Andy, I'm going to ask you to sprint to the end of the room, if that's all right. Sorry, I should have said walk at a leisurely pace to that end of the room. I think we've got time for one more question. Very conscious that we are between you and lunch.
Hiya. So we talked quite a bit about how there's quite a lot of onus on the advisor to identify differences in policies, etc. I just want to give a bit of an anecdote to that. So I took out a critical illness policy about 20 years ago. Just turned 20. probably the most forward-thinking 20-year-old in my life that I've ever met. But I took out the policy. 20 years later, had children. Partner was pregnant. Found out shortly after birth that one of our children had a congenital heart disease, and downloaded the pack to claim. Was going through the claim process, and sorry, a little bit wonky. The policy stated that that I downloaded stated that the children would be covered from day one, and I thought I'd be able to claim. I had to be flown down from Edinburgh to Birmingham, be with my child. Partner was still in the hospital, spending a lot of money on living life while I was looking after our hours-old baby. Unfortunately, she passed away after 4 weeks, 2 days before a 30-day exclusion that had been written into my policy that wasn't written into new policies. My argument would be that is unfairly detrimental to existing clients as opposed to new clients, and it's almost like it wouldn't have been something that would immediately flag even with an advisor or the person, because it's almost an unpredictable or unforeseen event. The insurer in question's in the room, so I won't name them, but to me, there's no reason why that could not have been changed previously for existing clients when they've obviously identified and said to me that it was removed because it was unfair.
So I guess this is exactly the scenario we're talking about as part of this panel, so interested to get all of your thoughts.
I think it's the exact opposite situation to the one we were hearing about earlier, where a change had been made where someone would not have been able to claim and then could. And I think it's when you hear a story like that, it's really difficult to take any other view other than it would be in people's best interests if we, in that situation, did the right thing. It's easy. It's easy for me to say that because I'm not in the situation where I have to make decisions on things like that, but it seems obvious to me that that's what we should do.
Mm-hmm. Yeah, 100% agree, and sorry that you went through that.
An insurer for making that claim. The only bit about not updating the policies is might put the gentleman over there off for not claiming. So if you'd actually read the policy and it said 30 days and 28, that's worth it. But if you put the claim in, I don't know who the insurer is, but there's definitely nothing stopping the claim.
It happens a lot. I've had 3 people in the last 12 months that had an old policy and their baby did pass away within 30 days. And because of that clause, they didn't pay out. So it happens a lot. It really does, and it shouldn't be. It should be people, you probably think you had child cover, you had it included on your policy, but you wouldn't have known about that 30-day clause. And that's why it's so important to review people's policies, especially if they are going through a pregnancy journey, because unfortunately, these things do happen.
Okay, so that leads me to a final question, I guess. So if new customers only upgrades were abolished tomorrow, what would be the single biggest consequence, do you each think, for customers, for advisors, or for insurers? So, Ryan, we'll start with you.
That's a really tough question. I don't think we'd see a lot of impact, honestly. Yeah.
Emma?
I think I always put the clients first. So I think if there isn't these changes going to existing customers, there's going to be a lot more people that don't get claims and payouts because of the changes not being made on existing policies.
Mm-hmm.
Yeah, I mean, I just go back to what I said before, that if I'm confident that it's in my best interests, it's good, and if I think it isn't, it's bad.
Yeah.
Not sure I can add to that.
Okay, so I wonder if you there in the audience think that in 10 years' time we will still have new customers-only features, or is this something that the next generation of customers simply wouldn't tolerate? I hope you found today's session interesting and thought-provoking. I wonder if when the session started you thought you knew what you thought about this issue, but now you're recognising that it's a more nuanced issue. There are implications and consequences for any decision, and there are a multitude of factors that we need to consider. Customer acquisition, loyalty, trust, our moral obligation to customers, to name just a few. And the new era of Consumer Duty adds a whole other perspective, but perhaps it doesn't make it any easier to distinguish between genuine product development and good marketing. Now there's something to ponder and discuss with your peers as you network over lunch. And on that topic, you'll be delighted to hear that as attendees today, you're all about to receive a very special loyalty bonus in the form of a delicious lunch waiting just outside in the Marble Ballroom. It's available to all of you in the Marble Ballroom where you enjoyed your break earlier. But it doesn't stop there. Your membership perks continue after lunch with an interview and the ProtectX live session where you get even more food for thought. And I promise no exclusions apply. So back in here for 2:15, please.